Why business advice isn't risk-free anymore. Learn more about professional indemnity insurance before signing your next contract. Hello, welcome to another episode.
Namaste, how's it going?
All good? Let's get started.
So, today we are turning our attention to an insurance that most companies often overlook.
Yes, we are diving into professional indemnity insurance or PII
Okay,
and why it's becoming critical for businesses operating at a large scale. So, first let's understand what it does.
sure. In simple terms, PII protects a business if a client claims a financial loss due to the company's professional services or advice.
Okay.
Basically, if something goes wrong in your work and a customer sues, PII can cover the legal costs and payouts.
Correct. And in today's scenario, what's important to understand is that the nature of risk has evolved.
Yes, of course.
It's no longer just about products and warranties.
True.
Today's businesses run on expertise, strategy, design, code, compliance, and so on. And one misstep in any of these can trigger major consequences.
I agree. That's probably why we are seeing a shift. With tighter contracts, global clients, and growing awareness among stakeholders, even the perception of a service failure can result in a claim.
Correct. So let's break this down. First, we need to understand what makes PII different from other covers.
Yes, the main issue here is that a lot of companies think they are protected by general liability or D&O insurance.
Yes, and that's true, but only to a certain extent. Because general liability usually covers bodily injury or property damage, and D&O protects leadership from shareholder or regulatory claims.
You're absolutely right. So here's where PII makes a difference. Professional indemnity insurance covers claims that arise directly from the professional work your company delivers, like incorrect advice, missed compliance steps, or even flawed technical design.
And remember, the cost of defending those claims are not easy.
Yeah,
Even if you're not at fault, you still need to respond legally and financially. That's where PII steps in.
right. This reminds me of a major engineering firm that faced a claim after a mechanical failure linked to a project they had delivered. So, they had PII in place.
Oh, but then why did the insurer deny the claim?
Here's the catch. The work had been done before the retroactive date of the policy. So, even though the claim came during the policy period, the error had occurred earlier.
Oh, that's where we need to be so careful with the details.
Yeah. And now, for anyone who's not familiar, the retroactive date in a PII policy is basically the date from which your insurer agrees to cover you for work you've already done.
Yeah.
So, if you've been providing services for a while and then you issue a new policy, the retroactive date decides how far back the coverage applies.
That's right.
In this case, however, the retroactive date started on January 1st, but the design work that led to the claim had been completed 6 months earlier.
Okay.
So, even though the client made the claim during the active policy period, the error itself occurred before the retroactive date.
Right. And that explains why the insurer wasn't liable.
hmm
The claim didn't fall within the covered time frame, and that one gap in timing meant the entire financial burden landed on the company.
And this struck the company's finances majorly.
Yeah.
But this just goes to show that policy dates, especially the retroactive date, aren't just formalities. They are central to whether a claim will be honored or not.
Yes. Now let's look at a very different kind of situation.
hmm
A few years ago, one of India's largest corporate frauds came to light, and it shook the entire corporate world in India as well as abroad.
Oh, I think I know this one.
Yeah.
Is it the one in which a leading IT services company was exposed for having inflated its revenue and assets by thousands of crores over several years?
Yes, you've guessed it right.
Hmm,
And the fallout was immediate and global.
right.
The stock price crashed, investors lost confidence overnight, and regulators launched investigations.
Yes, and consequently, the legal costs due to all the lawsuits started mounting fast.
But here's what changed the game.
Mhm.
They were covered by a professional indemnity policy worth $60 million. That
Mhm.
one policy covered defense costs, regulatory penalties were permitted, and settlement amounts. And nearly 95% of all legal expenses were paid through that policy.
That's possibly what saved the day for them. I mean, without that cover, the financial damage could have been massive,
Yeah,
possibly even fatal for the firm.
true. The aftermath of this case also tells us a lot. Premiums for similar firms in India skyrocketed, and insurers restructured their policies. The message was clear. The risk had been underestimated until then.
I mean, this wasn't just about one case or one scandal. It became a turning point in how Indian service businesses viewed risk.
Yes.
It proved that even the most respected and experienced firms aren't immune to legal fallout, especially when reputations and money are on the line.
And it made one thing obvious. If your business model is built on professional advice,
Mhm.
audits, consulting, or strategic services, PII isn't optional. It's a must have.
So, what are the takeaways? First, align your policy's retroactive date with the actual service timeline.
True.
If you've done the work before the policy starts, it won't be covered.
Second, evaluate whether your cover matches your risk. Have you expanded services? Signed more global deals? Your policy should reflect that.
And third, be proactive. Don't wait for a claim to review your terms. Regular risk audits should include your insurance as a strategic component, not a compliance formality.
Also, remember that having PII in place isn't just financial protection, it signals credibility.
True.
It tells clients and regulators you take your work and its consequences seriously.
Absolutely. It's also becoming a standard in vendor due diligence. For many requests for proposals or RPFs,
Mhm.
not having PII can be a deal breaker,
Yes.
especially when working with international clients.
So, to everyone listening, if your business is built on delivering professional services, PII is not a back office checkbox. It's a frontline defense.
Thanks for tuning in. For more insights or to speak with experts who can help assess your coverage, visit www.mahindrainsurancebrokers.com.
Until next time, stay covered, stay smart.
Bye.
Goodbye.